Ethereum is celebrating its birthday, and in today's video we'll take a look back at what the protocol has achieved over its 11 years, as well as what might be next for the ecosystem's native cryptocurrency, Ether. We'll also check in on Internet Computer, which I know many of you are quite interested in, plus a few other curious stories worth your attention. Help this video hit at least 300 likes, subscribe with the bell if you haven't yet, and let's get started. Ethereum just turned 11, and although the past year has been anything but calm, the protocol remains one of the most important engines of the crypto industry. Over more than a decade, Ethereum has become the home of DeFi, the NFT boom, Layer 2 scaling, and countless innovations that changed how people interact with blockchain technology. Today, over 60% of all crypto activity happens on or around Ethereum, regardless of short-term price swings. The biggest milestone in Ethereum's history is of course the merge, the moment the network transitioned from proof of work to proof of stake. This wasn't just a technical tweak, but a fundamental upgrade that cut energy consumption by over 99% and opened the door to a more efficient, scalable and sustainable ecosystem. After the merge came Shanghai, which finally allowed stakers to withdraw their tokens, something that stabilized the market and boosted confidence in the model. The past year was tough, a sharp drop from the highs, competition from Solana and new L1s, and ongoing pressure around fees and scalability. But despite all that, the network keeps evolving. The Layer 2 ecosystem is growing explosively, and upcoming upgrades like Dunk sharding promise even lower fees and higher throughput. Happy birthday to all Ethereum supporters and investors. Now let's see how Ether itself is doing. The token hit a new all-time high of nearly $5,000 last summer, but as you know, the recent months have been brutal for the market, and at the time of recording, it is trading below $1,900. At one point, the drop was so deep that Ethereum briefly became the third largest crypto after stablecoin USDT overtook it. Shortly after, the rankings flipped back. Crypto Twitter is far from united on where it might go next. Some, like Crypto Bullet, expect a further drop below $1,200, while Captain Fibix sees a potential crash toward $1,650. Ali Martinez is also on the bearish side, spotting a sell signal and suggesting it might be a good moment for investors to lock in profits, if they have any. Of course, plenty of analysts remain extremely bullish. User Gordon believes that once Ethereum breaks above the psychological $2,000 level, it won't look back. The declining amount of ETH on exchanges supports the optimistic view. Right now, just over 15 million ETH sit on centralized platforms, a 10-year low. This shows investors are moving their coins off exchanges into self-custody, which reduces sell pressure. Moving on to Internet Computer, or ICP, which many of you have shown strong interest in. At the time of recording, the token trades slightly above $2, a staggering 99.7% collapse from its all-time high near $700 in 2021. ICP's market cap is just over $1 billion, placing it around the 60th largest crypto. And despite the brutal decline, there are still optimists predicting a recovery. User CW believes the token has completed a strong accumulation phase, noting that similar periods in the past were followed by solid price jumps. Another analyst even predicted a potential pump to $9 in the near future. But naturally, there are pessimists too. Cryptorphic expects a drop to $1.67, while CryptoPatel warns that if the $2 zone fails, we could see a crash towards 50 cents. If you're invested in ICP, drop a comment with your expectations for the coming months. Next up is Coinbase, which released its Q2 results, and the picture is mixed. The exchange reported around $1.2 billion in net revenue, roughly in line with expectations, but still down 19% year over year. The bigger hit was the net loss, $359 million, far worse than analysts anticipated. Transaction revenue came in lower than expected, and subscription and services revenue reached $555 million versus the projected $590 million. The reason is clear: weaker trading activity, lower volatility, and a 25% drop in overall crypto spot volume during the quarter. Still, Coinbase had one strong highlight. The exchange reached a record global market share of 10.3%, up from 9.1% in Q1. Even as the market shrinks, Coinbase is grabbing a bigger slice of it. The company continues to position itself as an everything exchange, expanding beyond spot trading into derivatives, prediction markets, tokenized assets, and payments. After the results were released, Coinbase stock fell over 5% in after-hours trading, showing investors weren't thrilled with the loss, though the price quickly recovered afterward. We wrap up with a few flash updates. P Network announced that its mainnet is upgrading to Protocol 26 and all node operators must complete the update before August 11 deadline to stay connected. This is a key step before the final major upgrade, Protocol 27, with 8 successful updates already completed in recent months. Protocol 26 brings the latest features and improvements and prepares the network for its next phase. Strategy reported its Q2 results and posted a massive $8.2 billion loss, even though it increased its Bitcoin holdings by another 11% during the quarter. The company continues to accumulate BTC aggressively, but the price drop in Q2 hit its balance sheet hard. Meanwhile, crypto exchange Luno announced new layoffs and will cut about 20% of its staff as weak market activity continues to pressure revenues. This is another round of reductions as the company tries to optimize costs and adapt to the tougher environment. That's our Friday episode, team. If you enjoyed it, you know how to support the channel. Have an amazing weekend and see you soon.